The Federal Reserve will kick off its annual economic policy symposium later this week in Jackson Hole, Wyoming. There's a lot of pressure, at least on Fed Chair Jerome Powell, who's expected to speak Friday. This will come after last week's yield curve inversion, which caused roller coaster-like movements on the market. Yahoo Finance's Cheung is going to give us a preview. He's going to Jackson Hole. What do you have in store for us, Brian?
Well, aside from trying to go by my cowboy boots first, it seems like it's going to be a very interesting Jackson Hole conference to watch. Everyone paying very close attention to Chairman Powell's speech, which is scheduled on Friday morning. He'll be talking, we don't know about exactly what we do know is that he'll be walking quite a tightrope given all the developments that we've seen in the economy since the Fed's last meeting on July 31st, when they did decide to cut rates by 25 basis points. On one hand, since that meeting, we've gotten some more concerns about the economy because of the trade war negotiations and the fact that it's flared up with the threat of this new round of tariffs, which sent markets going down, in addition to the yield curve briefly inverting last week, although it's uninverted since then. On the other side of the equation, you have pretty strong domestic U.S. data. So we had a pretty impressive retail sales number for the last recent print. And in addition to a pretty solid jobs report the Friday after the July 31st FOMC meeting. So it'll be interesting to see what markets are expecting and whether or not they're satisfied with what Jay Powell says on Friday. For what it's worth, Credit Suisse had a note saying, quote, given the gap between market rate expectations and FOMC projections, risks are for a hawkish surprise in our view. What they're basically alluding to is the fact that the Federal Reserve has only signaled up to 2 rate cuts by the end of this year. That's as of the dot plots presented in the June meeting. And that squares up with market expectations for another 1 or 2 rate cuts by the end of this year. So interesting to see what Jay Powell and other Fed speakers say on Thursday and Friday this week.
Are we going to get the minutes from the last Federal Reserve meeting on Wednesday? And do you expect that we're going to see some kind of back and forth that gives us an idea of where we're going in September?
Right. So as you mentioned, FOMC minutes coming out on Wednesday, that will give us kind of a retrospective as opposed to prospective view on what's going to happen in terms of Fed policy. So we'll peel back the curtains a little bit on the July 31st meeting, where, if you recall, they did cut rates by 25 basis points, but there were actually 2 dissents, one from Boston Fed President Eric Rosengren and another from Kansas City Fed President Esther George. So not everyone on the same page. So on one hand, what were the deliberations behind the decision to cut by 25 basis points? But then on the other side of the equation, when they did decide to cut by 25 basis points, how should Chairman Powell have messaged it? As we saw in that press conference on July 31st, he had a really tough time explaining to the media and also to the public that this is what he described as a mid-cycle adjustment, not necessarily the beginning of an aggressive easing cycle. Shortly thereafter, you had markets that were confused about that, hoping for maybe a little bit more of an aggressive stance, and even President Donald Trump tweeting that being the case, saying he also would have personally preferred Jay Powell had a more aggressive policy stance in terms of future cuts. So it's also not just juggling the market expectations with what the Fed sees, but also the pressures coming from the White House as well.
We're going to talk about those pressures, but you make sure to get a Huckleberry Daiquiri when you're out in Jackson Hole.
Sounds good, Adam.
I didn't really like them, but it's a tradition.